Right guys, welcome back to my YouTube channel, The Mentor I Wish I Had. This video for me is a complete non-negotiable. If you don't watch this video and you don't take the time to understand how money, how banking and how investing works, why are you even trying to set up your own business? Seriously guys, this is coming from someone who spent the last decade working in a bank, looking after customers all the way down from £250,000 a year in turnover, all the way up to billions in turnover, and has spent close to a decade now running my own luxury online brand. I'm taking like literally 20 years of combined experience here and sharing with you over this video the non-negotiables that you guys have to understand on money, banking and investing. So sit through it all the way to the end. I will love to hear your comments throughout and at the end of the video, and please do share if there's anything in this video where you have some eureka moments, aha moments, because there's going to be plenty. Okay, so before we jump into the video, we're just going to take a quick 30 seconds to look at who I am and why I set up this YouTube channel. Before we jump into today's video, a short introduction from me. My name is Jonny Garrett, and over the past 7 years, I have built my own British independent luxury watch brand into a 7-figure business, all while grinding away at Britain's largest bank in London. With no investors, no debt, and no mentor, it was a challenging and lonely journey. I worked day and night meeting with hundreds of successful business owners who shared their lifelong knowledge with me to unlock everything I have achieved today. Why spend the next 7 years of your life learning the hard way when I can share that knowledge with you for free right now? So if you are ready to commit to your business dreams, hit that subscribe button now. Right guys, welcome back. As I said at the start of this video, this is the absolute non-negotiables that every single person watching this video right now needs to be able to understand on money, banking and investing before they even consider setting up their own business, whether it be a part-time business, full-time hobby business, lifestyle, whatever. So the first category that we're going to jump into is banking. Now, listen, every one of us has a bank account. You can't literally operate in the world that we live in today if you don't have a Visa card, you don't carry a wallet around with a debit card, a credit card, an Amex, whatever. But do you actually understand how a bank works? Because I'll be honest, it took me some time of actually working in not just one bank, but 2 of Britain's largest banks to fully understand how a bank operates. So the first thing that might just blow so many people's minds right now is the following statement. The way that almost every bank in the world operates is as follows. You have people who place money in a savings account with a bank, and then you have people on the other side of the spectrum who borrow from a bank. Banks could never give customers mortgages, loans, credit cards, any form of debt without savers placing money into savings accounts or current accounts. So you guys might think, the reason that banks can provide mortgages to everyone in my country or provide unsecured loans or that car loan for my pal to buy his car or to buy his house or whatever is because they just print money. And or they can just dip into this big vault that they have and just take the money out and just give it to the customer. That is not right. Banks are using the money that you put into your current account or into savings accounts, and they take that money and they lend your money to other people, and that lending is them borrowing the money. Okay, so let's use an example of this. Let's say you put £100 into a savings account, and that savings account you maybe can't touch for say 30 days because if you do, your interest rate will be penalised. The bank will then take that £100 that you've deposited, that is your money, and they will give that £100 to somebody who wants to come and take a £100 loan. Okay, so they are not borrowing the money from a big bank vault. They are actually taking it from customers who are placing money in the bank as savings. Now, this fact here and statistic might just absolutely blow everyone's minds because, believe it or not, so many people that I talk to don't realize that the way that banks provide money, as in debt, for people to be able to buy things, is from other people who have put money in the bank to save. Now, this is a very important point, guys, because interest rates are very high right now. So people who have a mortgage or a credit card or an overdraft or a loan are feeling the pinch. Interest rates are, when interest rates go up, that means your monthly debt repayment is also going to go up. But what people don't consider is that same interest rate, which is going up and is high right now, is fantastic for somebody who's saving money in a bank. If you're a retired person with no debt and you're just placing money in a savings account to be paid an interest rate every month, you are absolutely loving life right now because you are getting paid an incredibly high interest rate on the money that you're saving. So for example, guys, if you put £100,000 into a savings account with a bank in the UK right now, you could probably get an interest rate of maybe even 4% or maybe even 5% if you're lucky, instant access. So that means, guys, get this maths here. If you put £100,000 into a savings account with a bank in the UK right now, after 12 months, you're going to get paid £5,000 in interest. Yes, £5,000 in interest for doing absolutely nothing, nada, okay? £5,000, unbelievable. But if you're a debt holder right now, if you have a mortgage or a credit card or a loan or an overdraft, unfortunately, poor you, that interest rate that the savers are doing so well to achieve is actually being handed to you as the debt holder. And you're thinking, oh my God, my mortgage is now 3 times higher, when on the other side of the spectrum, the saver is making so much money. So something that you need to know straight away, guys, with how a bank operates is there are borrowers and there are savers. A bank uses the money from the savers and gives it to the borrowers, and that is how the entire financial system works. Now, how are interest rates determined? Well, in the UK, you have the Bank of England. In the US, you have the Federal Reserve. In Europe, you have the European Central Bank. These are all just names for central bodies that decide what the base rate is for banks in your country. Now, these are very, very important pieces of news that you need to follow because you need to understand where interest rates are, because that will decide how you operate your own finances, but also, is it the right time to set up your business because of where interest rates are? When interest rates go up, that means it's going to become more expensive for your customers to consider purchasing your product or service because their electricity bill, their water bill, their mortgage, their credit card payment has all gone up as well. So you need to make sure, are you moving into an industry or a sector, or do you have a customer base which is insulated from economic downturns, or do you need to be able to take this into consideration? Now, what I would say that 100% of the time, you need to be able to understand the economy, interest rates, banks, and money. Okay, so take notes, listen carefully, because I'm sure already there's going to be people's minds who are going to be blown just from what I've said up into this stage of the video. Now, you need to understand, why do interest rates move? Why is the Bank of England, the Federal Reserve, or the European Central Bank setting base rates in the first place? So every month, usually what they do is they sit around as a panel and they talk about whether they should increase, what they also call hike, interest rates up. Now, why are interest rates high sometimes and why are interest rates low? A central committee may decide to reduce interest rates to be able to stimulate, or really the simple term is to be able to drive people to spend money in the economy. If the economy is struggling and people aren't buying anything because they're so concerned about their energy bill or their debt repayments, what the central committee might do in a country is reduce interest rates. They are doing that to be able to make people leave their home and to be able to go to the high street and actually spend their hard-earned money, or of course spend their money online, but they're trying to cause people to actually be able to spend their hard-earned money. If interest rates are high, they're actually doing that to slow spending down. Inflation may be increasing rapidly, prices may be increasing rapidly. So what they're trying to do by increasing interest rates is slow down the spending in your country. So when you see that credit card rates are high or loan interest rates are high, or when you go to the supermarket and your food shopping is high, guys, there's a reason for that happening. Don't just think, oh, it's all going to fix itself. There's reasons and decisions that are happening all around you on a daily basis that you need to fully understand. And the reason that interest rates are high is because the government in your country is trying to stop people from spending money. And the reason that interest rates then become low in months or years after is because governments are trying to drive you to spend money in your economy and stimulate the economy. Guys, you have to fully understand this before you even consider putting your own hard-earned money into setting up your own business, okay? Something else to think about, debt. Now, I am massively against unnecessary debt. I believe the strongest companies in the world right now are the ones that are privately owned, where if possible, you can own 100% of the ownership of your company and you have zero debt. Now, it may be that when you start your company, there are no ways that you can possibly avoid not taking out debt, not taking out a personal loan, not putting the purchase of your laptop or your Mac or your iPhone that you must have to operate your company onto a credit card or some other form of debt. But please try to avoid any unnecessary or unwanted debts. And if you have debts carried over from just your personal life, I would highly recommend that you try and pay those off in as quick and as manageable a repayment plan as possible. So I'm going to give you a quick high-level summary of debt. Right, you've got an overdraft. An overdraft is basically like a loan which is attached to your current account. And when you get to zero, you can have the ability to go into a negative balance, okay? And by going into that negative balance, you can access something called an overdraft. Now, an overdraft might have an interest rate of, I don't know, let's say 5 to 10%. And every time that you go into or under zero and you are using the bank's money, they are going to charge you an unauthorized borrowing charge that you will be normally charged on a daily basis. Every single day that you're in your overdraft, you will be charged money for doing so. So please try not to use your overdraft. Now, an even worse case scenario is when you go over your overdraft, and that's called unauthorized borrowing. So let's say you have a £2,000 overdraft. As soon as you go to £2,001, you are then in what you call unauthorized borrowing. That is when you are using funds that haven't been pre-qualified or allocated to you by the bank. And that's when bank charges are going to be pretty insane, guys. Sometimes even £25 a day of unauthorized borrowing charges. What you need to try and do is pay yourself back into the overdraft, and then as quick as possible, try to pay yourself back into a positive balance where you're just using the money that you have in your current account. So that's an overdraft. Then you have a credit card. How does a credit card work? Well, a credit card usually has an interest rate of circa 17 to 25%. Yes, 17 to 25%. So you are given a credit limit of anything between, I don't know, £500 to let's say £10,000. Now you can actually use a credit card very, very sensibly, and normally there are really awesome deals out there where credit card companies will actually give you benefits and maybe even cash back if you use their credit card. But, and the big but here is, don't fall into the trap of not paying your credit card off in full every month. You need to make sure that when your credit card statement arrives, the entire card is paid off in its entirety every month. If it's not, you will then do something called paying your minimum balance back, where let's say you have £1,000 on a credit card and you just want to pay £25 back a month. That is a terrible situation to be in, because you will then start getting charged anything between 17 or 25% of interest for every repayment that you make. So to quantify that, guys, this is crazy. For every £100 that you will pay the credit card down by, anything between £17 and £25 of that £100 doesn't pay the debt down at all. It's just the interest that the bank takes for you using that credit card. Unbelievable, okay? So try to avoid credit cards. And if you do use them, make sure you pay the entire credit balance off every single month. Next, loans. You've got something called an unsecured loan or a secured loan. An unsecured personal loan usually is a loan up to £25,000, which is completely unsecured. It means that it is not used as security against any assets that you have. They're not leveraging the loan against a property that you own. It's unsecured, just usually based on your credit file. Okay, and this is another important point because your credit rating is something very, very important, which banks will check if you want to be able to get an unsecured personal loan. A credit rating basically is a series of history and transactions that have been compiled over your life, telling the bank how low of a credit risk you are and how good you have been at paying your loans off in the past, or paying your credit card off in the past, or paying your mobile phone agreement off in the past, or your council tax. Numerous different things they're going to be checking, okay? With an unsecured personal loan, you could get an excellent promotional interest rate of maybe 7%, 10%. But guys, a warning here, even if the bank brochure or the advert is advertising 7%, it is not until after you have been credit checked by the bank that you will be offered your actual interest rate. If your credit rating is poor, that 7% interest rate may jump all the way up to 15% and beyond. So be very careful. Loans, again, highly avoid it if possible. But of an overdraft or a credit card or a loan, I would always recommend a loan because you have structured monthly payments. You can spread the cost of those payments normally over 12 months to 60 months, so as far as 5 years out, and it just makes budgeting more manageable. And normally, guys, but check with your bank, you can make overpayments. So if you receive a bonus from work or your business is trading more successfully in 1 month and you have more cash, you can use that cash to pay that loan down earlier, okay? But what I would say, debt, which is overdrafts, loans, credit cards, try to avoid them at all costs. The perfect business model that I recommend is a business which is what we call net cash, profitable, and can weather any economic downturns. So a net cash business is a business that operates just with the cash that is the cash that you own, the money that you have generated from sales. You're not drawing down overdrafts, you're not using loans, you're not using credit cards, you're just using the money that you have in your current account. And I actually like to operate as an average daily net cash business. So for all 365 days in the year, we never use debt. We only ever use the cash that we have in our business. Point number 2, profitable. Make sure your business is profitable. At the end of every year, you want to have a net profit business rather than a net debt or negative worth business. You need to make sure that you are running some kind of profit at the end of every single year. This is really important, guys, to show a healthy set of accounts, profit and loss at the end of every year that your accountants will produce. And then finally, you need to make sure that your business can actually weather any economic downturn. How do you do that? You make sure that you have at least 6 to 12 months of operating cash in your current account. So if you just turned off sales overnight and didn't sell a single product or sell a single service in 6 to 12 months, it doesn't matter because you have enough money to be able to see you through that 6 to 12 month period, okay? So that is conversation number 1 on how a bank operates. You've been able to understand borrowers versus savers, interest rates, central committees, so the Bank of England, European Central Bank, the Federal Reserve, debt, different types of debt, and how I would recommend you run the perfect business from a monetary standpoint. The next thing is money, okay? You really need to understand just the simplest way that money works. What is it before even considering setting up a business? So money is a commodity that we use to be able to live. hundreds of years ago, before money, people used to trade seeds, they used to trade commodities, they used to trade bread. It's the same thing, guys. Money is a resource that allows you to be able to trade and exchange something in return for something else. So you need to make sure that you have money to be able to have a profitable company so that you can pay your suppliers in exchange for your product, or you can pay your tax bill, or you can pay your employees. It's simply a resource that allows you to be able to operate a company and live your life. Now, I would say lesson number one is do not, yes, please do not pin your entire goal of your business purely on money. Don't go into this, which I think so many people do, and just think, I want to make as much money as possible. That is not the right way to go about things. You need to build a business, a product, a service, a brand which is built around the value that you bring to your customer, the values that you have as a company, the ethos that you have as a brand, your identity, how you give back to charity. Because if you get that right, then money, yes, will be a byproduct of getting everything else right. But if you're solely focused on money, the customer, your stakeholders, everybody who looks at your company is going to see that they are literally just trying to achieve as much money as possible and as much profit as possible. And that is not a business that has longevity. Okay, guys, you need to be able to be building a business that adds value, has ethos, has values, has meaning. And then money, yes, will be a byproduct that you can reinvest and keep reinvesting into your company. Now, something which is super important is if you're not forecasting or budgeting your life right now without a business, what on earth makes you think that you are going to be able to run your personal life and your business without budgeting, without forecasting, or without tracking your spending? Okay? Do you think that simply by creating a business, creating a social media, a logo, maybe incorporating a company on Company's House is going to automatically make you an awesome financial treasurer and budget and save and be able to juggle both your personal and business life? So lesson number one for money, immediately from today, if you're not doing it already, budget. How much do you earn each month? How much is your expenses each month? How much is your profit or your disposable income? Are you saving, and I say this in most videos, are you saving at least 30% of your salary each month? Because there is no way that you will be able to build wealth or build a business even if you're not saving at least 30% of your salary. That needs to be the North Star. You need to be trying to saving at least 30% of your salary. So immediately from today, if you're not already, make sure you have a monthly budget. Make sure you have a daily budget. Break your monthly budget down into a daily spend. It might be £50 a day. It might be £10 a day. It might be £5 a day. At the end of the day, the more that you can save, the better you are putting yourself into a position to be able to succeed with a future business. And you can carry over all of that great discipline, consistency, but mostly discipline, to not go and spend your money on unnecessary items. And you can use that to be able to invest in your business. Now, what I'm not saying is that throughout all of your business career, you can never spend your money on things that you want to, on nice holidays, in nice hotels, in travel, in nice airline or maybe business class flying, or a nice car, a nice house. But what I will say, guys, is if you just delay your gratification and delay that impulse spending for years from now, you have a high chance of being able to spend the rest of your life as a wealthy individual because you delayed the gratification and the impulse to want to spend now to later in life. And that's something that I see so many people fall into the trap of. As soon as they get a pay rise, they spend the pay rise immediately on that new car, on that new house, on that new holiday. But if they just save that money for even just another 2, 3, or 5 years, they actually could have had financial freedom maybe 20 to 25 years earlier in life just by delaying that impulse purchase and having a budget and tracking spending and being disciplined. Okay? My final point is around investing. So once you've applied this and you've built up a business and you're starting to generate a healthy net cash, profitable business that can weather any kind of economic downturn, you are going to have to find a place to be able to invest this money. Now, usually it's always about investing the cash back into the business. So you need to make sure that you are constantly reinvesting that cash into your business to be able to test and generate more customers and more people to be able to buy your product. Now, so many people, the way that society is set up is they always tell you that you need to own your own property, which is categorically not right. And also they make you think that you need to own your property at such an early age. What is wrong with buying your first house in your late 30s or even into your 40s or 50s? There's absolutely nothing wrong with renting, guys. How terrible would it be to think that the house that you bought is such a financial burden that it inhibited you from setting up the company of your dreams that could give you the life of your dreams purely because you listened to society and thought, yeah, I need to get on the housing ladder at 25, okay? And also, my best advice for investing is this. Again, let's take an example of, let's say you've been able to save so hard and you get to the stage of having £100,000. For me, it's all about what we call yield or return. If you take £100,000 and invest it into, let's say, a buy-to-let property where somebody is going to be paying you £500 a month, you need to think about the hassle of that property. Does that mean you're therefore wedded to that country? Or do you have to bring in a management agent who you'll pay a commission to be able to manage that property? If not, every time the toilet breaks, you're going to get a phone call. Every time the washing machine breaks, you're going to get a phone call. Do you want to have that unnecessary hassle? You're going to have to find tenants. You're going to have to be concerned about when tenants hand their notice in, or if there's any kind of arguments over security deposits, etc. Then outside of real estate, do you consider stocks? But with stocks, do you fully understand the company that you're investing in? Do you fully read up on the news, on the economy? Are you really following that specific company in particular? Are you checking your stocks on a daily basis, or are you investing in a short, medium, or longer term? Are you maybe considering investing in art? How much do you know about the artist? Are you investing in stock? Are you investing in wine or art? You need to consider the yield on that £100,000. Now, for me, I know exactly how much of a return I can get by investing our surplus cash into our business. If there's anything that I've been able to guarantee and cultivate and learn over almost 8 years of running my brand, it's that I know that if you put the money behind me, I will back myself, and I know that I can get a greater return than I ever could in real estate, stocks, wine, or art, okay? So you need to try and work out what the potential return is. So don't fall into the trap of thinking, I have to invest my money into real estate, I have to get onto the housing ladder at the age of 25, because that money could actually be used better, invested into your business and reinvested and reinvested and reinvested every single time you sell a new collection, a new product, or a new service to your loyal customer base, okay? So consider that when you're thinking about investing your money, once you've understood how a bank works, once you've understood how money works, and once your business is booming, and you can start to consider how investing works. Now that's it. That they are the non-negotiables that you need to be able to understand about money, banking, and investing before you even consider setting up your business. I really hope that you've taken a lot of value from this video. I hope that you've taken lots of notes. Please do leave a comment below on what you've learned from the video, whether it's been useful, and what you would like me to cover off in my next video and next topic. Now, if you're thinking, Johnny, I really love this video, but I'm in a job and I've got no idea how to set up my own business, well, fear not. I have set up a fantastic video, which you must listen to next, on how to build a business whilst holding down a full-time job. So listen to that video next. I want to thank you so much for tuning into this video. If you did enjoy it, please do subscribe to my YouTube channel, The Mentor I Wish I Had. I really look forward to sharing more content with you, of valuable information that I wish I had known before I set up my business, and I hope to become the mentor to you that I wish I had. Until next time.